There are some very simple rules with candlestick analysis. Number one, the signal is usually the highest element for dictating whether there's a change of investor sentiment. Number two, it needs confirmation, and that confirmation includes a close back below the T-line. Obviously, the uptrend has been in progress with the most of the trading above the T-line during this uptrend. However, today we get mixed signals. Number one, we have a Doji right on the T-line. Stochastics just slightly heading down after a kind of a selling day in the market, or especially the Dow. This makes trading very simple. We know the simple rules of a Doji. It's going to move in the direction of how they open it after a Doji. The Dow closed as a Doji above the T-line. Aha! This chart on some of the other charts that's showing the the S&P 500 did a Doji type day just below the T-line. Or did this bullish day, but notice it still closed below the T-line. The same scenario is applied to the NASDAQ. We've had a bearish engulfing signal, closed below the T-line. Today they couldn't bring it back up and close above the T-line. So it has to be assumed we're still in a downtrend until they can close it back up above the T-line. However, there are still things moving positive even though the market was trading lower today. For example, SPPI, one of our recent recommendations, is still in a fry pan bottom. You may recall from previous presentations and YouTube that that the fry pan bottom has its own built-in importance, in the sense this is investor sentiment based upon this stock in disregarding what's going on in the market in general. A fry pan bottom or a J-hook pattern or any of the candlestick patterns will be much more effective moving in the same direction as they have been without having to worry about the market direction. And TLLP moved positive today, or stayed positive today, based upon what we call the classic. That's a fry pan bottom, which when it breaks out has a good strong price move. What does usually follows a good price move? Possibly a J-hook pattern. We have a J-hook pattern setting up. It still held up pretty well in this market and is still in a very strong position to go positive based upon a Doji right on the resistance level, that if it opens positive, it's going to do a Doji sandwich, which is a very strong bullish signal. If it does a Doji sandwich, which means this day right here will move with the same magnitude as this day right here, that also tells us we're breaking out of a J-hook pattern. That gives us a very strong probability we're going to be in an uptrend. This type of information, when you just put two and two together based upon what the expected results are from high probability candlestick trades and patterns, or signals and patterns, gives you a much bigger edge of being in the right positions at the right time. That'll be it. We'll see you in the chat rooms.